Hello, it's Friday, the 2nd of November, 2007. This is Brian Shannon from Alpha Trends Blogspot, and the market has closed. S&P 500 finished with a gain of 19 cents as it starts to stabilize a little bit after yesterday's sell-off. And you can see that intraday it did sell off pretty hard and came actually kind of close to that 200-day moving average down near 148.30 or so is the level where that's at. But it did recover and came right up to the rising 50-day moving average. So that 50-day moving average is still advancing. That gives us a little bit of optimism here. But as I've pointed out, we do have a lower high in this market, and the weekly time frame, a break below that low, I think, could kind of send this market down towards the next levels, which might be down near that 145 or so. So we still need to maintain a high level of awareness as far as the overall risks in the market, because they do seem higher. A lot of headlines out there making people nervous, and we've got stocks going in both directions, and big moves in both directions. So it's actually, like I've been saying, it's a trading environment with an emphasis on good stock picking. And if you're in the right stocks on the upside, Baidu up 23 points, Google up another 8 today, but Goldman Sachs down 10. First Solar down 9, ISRG down 9. So there's a lot of big point movers, and those are all, of course, higher price stocks that I just mentioned. But the S&P 500 does hold up, and we do have the 50-day moving average advancing above a rising 50-day moving average. That's usually not the environment from where a bigger correction comes from. However, it is looking more ominous, so you have to be very alert to the possibility that there could be more downside coming. Right now, if you look at the VWAP from the Federal Reserve, the average price that the S&P 500 is traded at since the Federal Reserve announced their 25 basis point decrease in the interest rates is right here at about 151.75 or so. So that would be potentially a level of resistance for this market. Of course, just looking at traditional technical analysis, you can see that it looks like 151.40 or so has been a level of resistance today. But the market did show a higher low, and now breaking past that will put the very short-term trend higher. But now we've got a declining 5-day moving average to deal with as well. So a lot of reasons to really just maintain a high level of alertness. Where you can kind of start to see develop potentially in here is that left shoulder or head, and possibly building a right shoulder. Maybe that's a little bit more clear on the 30-minute time frame. But typically, this is not a good sign on the 30-minute time frame, where you have the market, again, here's a stage 3 distribution, stage 4 decline, stage 1 accumulation, stage 2 markup, stage 3 distribution, and back to a stage 4 decline. No signs yet of accumulation yet, which means you still want to be very careful. But we are seeing lower highs and lower lows, and that's reason for concern, especially if these levels do get violated on the downside, down near that 200-day moving average. That 148 level is going to be very important going forward. So the potentials of where we're going to find resistance, again, 150, 140. The 152 level was important as support, as was 153. So those will be potential areas where we see selling early next week as well. The semiconductors, they did rally a little bit here, still kind of fighting with that 5-day moving average, and not much to report there other than this 450 does seem to potentially be a level of support. If it breaks below there, that could signal further trouble overall for the rest of the market as well. So just keep an eye on that with regards to the semiconductors. This is the line I drew in yesterday on the IWM. Russell 2000 did come down and touch on these lows almost precisely. And again, this is the most reason for concern in this market. We have the lower highs in here. We have this low being tested. That just reaffirms the level that this level is important going forward. And the more times that support is tested, the more likely it is to fail. This, you can see on the daily time frame, is looking like a head and shoulders top right in there. Let's just kind of clear that all up and take a closer look. We do have a declining 10 and 20-day moving average. 50-day moving average is flattening out. That's not a good sign. A lot of reasons to be concerned about these mid-cap stocks. This breaking down here could quickly, I think breaking below the 78 level could quickly lead to a test of the trend line down here near 75, 75 and a half or so. So keep your eyes on that 78 level Let's just kind of get a little bit more precise. 78.40, actually, I remember that now. But I wouldn't be surprised to see maybe a rally up towards that 80 level first and see another lower high and then a failure. And that could be a quick breakdown that brings a lot of emotion into the market and maybe a place to turn around from, but that's a dangerous game, picking any short-term turning points. So continue to be very careful on this IWM. Declining 5-day moving average here, lower highs and lower lows. It's just not looking good at all. The NASDAQ 100, once again, is almost bulletproof, up 0.75% today. This market traded big volume. It did sell off down to the 20-day moving average and closed basically unchanged from the open, that is. It opened higher, sold off, and then rallied back up to the opening price, which is why you have this candle that looks like that. The open and the close were almost exactly the same level. And you see that we do still have a 5-day moving average. It's advancing in here. However, mixed signals on the short term because we have these lower highs, but then we had these higher lows. So it's kind of just more neutral than anything overall in the short term in the NASDAQ 100. But overall, we've still got a great uptrend. I still think there's a lot of risk in this market, the way some of these leaders have been breaking down. Today, this ITRI broke down real hard. Crocs didn't rally at all. In fact, it was down once again. Wynn Resorts down. Garmin, and Garmin and Wynn almost look like the same exact chart, GRMN and WYNN. So there's a lot of risk. A lot of these leaders are starting to break down and break down pretty hard, but at the same time, there are still some good winners. I don't want to just talk about the losers. Look at this MSTR. This thing's been up real big lately. Of course, there's Google, which just cannot go down, it seems like, and that's what really makes it scary. So just continue to be very careful, honor your stops, and listen to the message of the market.